Grayscale CEO this morning has put the crypto world on notice and has given an update on the looming Genesis bankruptcy, what happens if their Bitcoin spot ETF dreams fail, as well as the big question, what if Bitcoin never recovers?
What happens if Bitcoin never recovers?
Stay tuned for this full clip, check the timestamps, but let's go over exactly what we know. According to their CEO, if Grayscale's Bitcoin ETF dreams fail, the firm may try a tender offer. And just as a reminder, Grayscale is a trust that buys Bitcoin, and then Wall Street investors can then buy shares in that trust. More traditional investors may like this because then they don't have to worry about custody. They can just buy a ticker. So again, Grayscale buys the Bitcoin and investors can buy shares in the trust. Right now, there's an almost unprecedented discount of 50% off buying through Grayscale, meaning essentially buy one Bitcoin, get the next Bitcoin free. And this concerns people. Now, on top of that, as we discussed in yesterday's video, Grayscale Investments, which manages GBTC, and Genesis, a company with a $1.5 billion hole, thanks to FTX, we don't know if they're going to declare bankruptcy yet, are both owned by Digital Currency Group. This raises questions. Because of this affiliation, is Grayscale about to go belly up? The CEO addresses that point blank. But the new information is that if Grayscale's Bitcoin ETF dreams fail, the firm may try a tender offer. A tender offer would make a direct appeal to shareholders to sell or tender their shares at a specific price during a certain time. These options could include a tender offer for up to 20% of the outstanding shares of the $10.7 billion trust. For a 90-second explanation, let's go to the CEO himself. We've discussed some of this already, but listen to this full clip.
Well, Grayscale Investments made headlines this morning after pledging to explore a tender offer for a portion of the shares of its Bitcoin fund should its conversion to an ETF not go through. Grayscale Investments CEO Michael Sonnenschein is joining me now to discuss. So this is a pretty big deal that you guys are doing this. So just to give viewers a little bit of history, you applied to the Securities and Exchange Commission to convert your trust into an ETF. That request was rejected earlier this year. You filed suit. Mm-hmm. So you're still pushing to get that done.
Yes.
So this is sort of a contingency plan, but talk to me about what's behind the decision and how it would work.
Well, so we have been focused on creating a Bitcoin ETF going all the way back to 2013. That's how we initially structured Grayscale Bitcoin Trust. It's always been our mission, and the full resources of the firm are still behind that initiative. We filed for a Bitcoin ETF in 2017. The SEC wasn't ready for it. GBTC has continued to grow and expand. It's now the world's largest Bitcoin investment vehicle. This past summer, the SEC denied our ETF application. To your point, we filed a lawsuit right away. And that's a reflection of us as a business. We're prepared for all outcomes. And so moving forward, even though, yes, now we are in the middle of litigation and we believe strongly in our arguments, they're common sense legal arguments that we think will be appealing to the courts. Ultimately, if we exhaust all of our options in the judicial system, we want our investors to know that we're prepared for that outcome as well and would explore a tender offer at that time.
And so the tender offer would effectively be that for 20% of shares, you would offer to buy them back.
The specifics of the tender offer would need SEC approval and shareholder approval. So it's tough to speculate on the exact mechanisms and exact pricing, but at this time we expect that it would be for up to 20% of the outstanding shares.
Now, how this affects you, and the reason Sonnenschein, the CEO, made this announcement to investors is because people are scared. He's attempting to quell the fears of GBTC investors because post-FTX, parent company DCG said it owes Genesis around $1.7 billion through 2 loans.
I mean, there's also concern because of the fallout from FTX, which then has spread to an entity also owned by your parent company, DGC. I'm talking about Genesis, which has a hole that it is now trying to fill. There's also concern about potential spillover for Grayscale, which again is under the same umbrella entity, although separate. What do you say to investors who are concerned about that?
You know, it's such a good question, Julia. I'm glad you bring it up because I addressed this in the letter I put out to shareholders today. All of the assets underpinning our products are safe, secure, accounted for, and unencumbered. And it's important to know for investors that when you're a shareholder in any one of these products, those assets belong to that product and you as a shareholder own the assets of that product. So these are separate and distinct entities that have no, direct tie or impacted by any other entities that are affiliated with Grayscale or anywhere under the DCG umbrella.
So he says that Grayscale is a separate entity, and even though Grayscale is owned by Digital Currency Group, they have their own assets, their own numbers, they're fine.
What happens if Bitcoin never recovers?
I'll save that clip for you till the end, but breaking news as of this morning, Binance US agrees to buy Voyager's assets for $1.02 billion. So Binance US to the rescue. The bid represents the fair market value for Voyager's cryptocurrency portfolio, which has a current market value of $1.002 billion, plus an additional consideration of $20 million in incremental value. Now, what does this mean for you if you had money in Voyager? Well, in a direct statement from them, they say, the Binance US bid aims to return crypto to customers in kind in accordance with court-approved disbursements and platform capabilities. So they will continue to go through the bankruptcy court system, but they want to return as much funds as possible to platform users. Next up, big news if you hold Algorand. The Bank of Italy taps Algorand blockchain platform for their digital securities project. So in other words, the Bank of Italy has selected Algorand to serve as its public blockchain platform. The platform, due to launch next year, will be the first time an EU member state has used blockchain technology for bank and insurance guarantees. Huge signal that this technology is here to stay. This project is part of Italy's post-COVID National Recovery and Resilience Plan, NRRP, and the EU allocated roughly $200 billion to Italy to be used for co-grants and co-loans. It is expected that a significant percentage of bank and insurance guarantees will leverage digital ledger technologies as part of Italy's NRRP. So this should be some great usage for the Algorand network, and in a direct quote from Italy, we selected Algorand because of its unparalleled level of innovation and security among permissionless DLT distributed ledger technologies, as well as because of its leadership and its sustainability. Our goal is to help Italy not only recover from the economic impact of COVID-19, but also excel through innovation and leadership. Big news in the crypto gaming world, Bored Ape creator Yuga Labs nabs new CEO from gaming giant Activision Blizzard. So Daniel Allegra is the new CEO of Yuga Labs. His new gig was revealed this morning, less than 72 hours after it was announced that he was stepping down from his position as president and COO of Activision Blizzard. So even though we're in a bear market, we're seeing more and more major players from Web 2 now entering into Web 3. By the way, be sure to join us at Bitcoin 2023, the largest crypto conference in existence. So much fun. It will be in Miami Beach in 2023, and use code ALTCOINDAILY for 10% off your ticket. Link down below.
What happens if Bitcoin never recovers?
Julie, I have been in crypto now for 9 years. And although there's a lot of mistrust in the system at the moment, I've never been more confident in the staying power of this asset class.
Really?
100%.
How so? Because the value of the asset is based upon the perception of its value. The perception now is pretty bad.
Mm-hmm. What would you say about tech stocks that have fallen 90% from their all-time highs? That are now, those companies are facing layoffs, they're, shedding business lines, et cetera. There's not a ton of confidence in them either.
No, but there's a use case there. They actually make stuff and do stuff, whereas Bitcoin, still, its use case, I think, is still questionable at this point.
Bitcoin has solidified at least one use case, and that's as digital gold. That is a narrative around Bitcoin that has been there, that will continue to be there. Ultimately, whether Bitcoin is able to achieve other use cases that are commonly known and commonly accepted as a payment rail or other use cases still yet to be determined, time will tell. But certainly the narrative around digital gold, non-sovereign assets, in an environment where a lot of people around the world are being directly harmed by the actions of their governments and the ways that they control their currencies, Bitcoin as a store of value, a digital gold for the digital age, is certainly a narrative that's here to stay.
As you say, time will tell.